Thanks for tuning in today on this home buying webinar. Well, not necessarily webinar, but I'm going to be speaking on the home buying process as far as buying a home when you're self-employed. You know, being self-employed is a little bit different from being W-2, where you don't get a constant income coming in on a monthly basis. It's not gonna generally not gonna be the same every month for a self-employed in person or a 1099 person. So what we want to talk to you today about is getting pre-approved, going through the financing process, and so you can better know that process. Self-employed people, we all know that your income is a little bit more not difficult, but takes a little bit more time to get you pre-approved and document your income. The reason of this is you don't get paid every month the same amount every month. So that income has to be calculated in a different way. So whenever you have a government-backed loan, and those are USDA, VA, FHA, conventional, and jumbo. Generally, all of those on just a regular bank with any of our lenders, they're going to look at the last 2 years of your tax returns, and we'll need all the pages. Sometimes with conventional, we can do 1 year of tax returns, but the caveat to that is you have to be in business for at least self-employed for at least 5 years, and have to be documented. On your self-employed, on your tax returns, common question is: do we look at the gross sales or do we look at the net profits? And every mortgage company is going to look at the net profits. What's the easiest way to look at what your income that our mortgage company is going to look for is if you look on your 1040s. Usually it's on page 1 on the 2020 tax returns. You'll see your net income that's being taxable, and then right under that it'll be your actual tax amount for the taxes that you have to pay the IRS on that income. That'll be the base. That'll be the starting point. Now, what we'll need to do after that is the reason why you send all of your pages is so we can look at the different schedules. Schedule C, 10, 11, 20s, or if you have a rental properties, we want to get all of that, because in your tax returns is some things that are able to be added back to your income. So let's say you have a gross sales of $300,000, and then after your accountant or CPA or tax preparer finishes, you have a net income of $30,000. Well, we have to look at your different schedules to look at how do you what expenses do you have in there that could possibly be added back into that $30,000 to get your true income as far as what the government wants to document. And some of those add backs are depreciation, interest on the mortgage, the casualty loss, so the one-time loss you might have with insurance. You might have had a insurance claim. Maybe, I know in Texas here we have had the ice storms. So in your 2021s, if that was a big damage to your business and to your building or your rental property, you want to make sure you document your income loss as far as your insurance claim, and make sure you report that on your tax returns, because that'd be the only way that we can use that income to add back to your net income. So that number can be pretty large. Another thing that is also, I said Depreciation is always a good common one. So if you have property, we have a lot of clients that has property, or you have equipment that you bought, as far as trucks, computers, desks, office equipment, office furniture, or if you have help your employees set up the home office by giving them an allowance, it might be a good idea if you did provide the equipment to your employees. Make sure you document that, and make sure you have told your accountants that your company uses the company funds to purchase that equipment, and to document that as a depreciating asset. And your accountant can tell you about how much of a percentage can be depreciated based on your certain situation. That number can always be added back in. So once we get that in, then it's either we're dividing that for 1 year, then we'll do it for the year before, because you need 2 years generally in most cases. You'll need 2 years of tax returns. Once we get those numbers, you divide it into 24 months. Now, that's the most common way that everybody documents your income as far as a government-backed loan. That also add back in your W-2 income if you W-2'd yourself. So that is already taxed. So you'll use the top line of that W-2 income, not your net income, but it'll be the gross of your W-2. If you have a K-1, we'll use that as also a part of your income. So those two things will also be added back into your income. After that'll be all the income that we can use as far as documenting your income. Now, from there, we pull everybody credit. That's the only way any lender will know how to get your debts, what is documented on the credit from the 3 credit bureaus. That's Equifax, TransUnion, and Experian. Please don't think that just because one lender pulled your credit yesterday that we can use that lender's credit report. That's just not the case, and that's the case for anybody. Every company has to use their own credit pool, so, and that's not a big deal. Generally, if you are pulling or shopping around for a mortgage, long as it's within 15 days of the pull, it will have the same credit score that everybody used in that 15 days. Now, your actual credit balances might be different because your credit report changes every day based on any kind of usage. So if you had $100 balance on the credit card, and then today you charged another $1,000 on it, and then tomorrow you got your credit pulled. Depending on that credit card, it might report every day. So instead of having a $100 balance, it has a $1,100 balance. So that might change your minimum payments that's due, because the credit card might report a different minimum balance due. So those are one of the things to think about. From there, once you get all of that information, we'll put it in the system and get you to underwriting, and then get you a pre-approved amount. So that amount is from us, is we go to the very top of what you can get pre-approved for. So that'll give you more confidence in going into shopping for a home. You can always buy a home less than that amount with no problem. But if you want to spend more, you have to come to the closing table with that additional funds. After you get the pre-approval letter, we would always do an appraisal and pull title um, work on that property. The reason the title is there is to make sure that home can be legally transferred from the sellers to the buyers with no outstanding liens that would go in front of the mortgage itself. So, and that's across the board. No mortgage company or lender will generally wants to be in the first position lien. So that means if your home, if something happens and they have to foreclose on your home, they'll be the first ones to be able to receive the funds once your home goes to auction. Uh, After that, you'll just go to the closing table and close. So that's the most conventional way of getting a mortgage as being a self-employed client. Now, there are other ways of getting into a home if your 2 years of tax returns just doesn't work for you. And that's one of the benefits also about being a self-employed person. We have asset verification loan. That is where we'll just use your bank statement, just 1 month bank statement showing the assets that's in your account. And then we will use that as your income to be documented. So that could be a lot easier than using your last 2 years of tax returns. We also have a income verification product. It is where it's no tax returns, no debt to income ratio, and no statements or verification of your employment. So you have to put down at least 20%. That's the minimum down. You have to have a 680 minimum credit score. And that product is a 30-year fixed rate, fully payment. So that's a principal and interest payment along with your taxes and insurance. And if there is, well, if there are HOA fee, that's not included in your mortgage payment. They also have a interest only product for the same income verification. It is where we just use the interest only on your home loan. That's the only thing that's going to be collected every month. So your principal would never be touched unless you want to make an additional payment of that mortgage. That's sometimes is a really good option for a self-employed client because every month it's ups and downs. It's never, steady. That's generally the case. So if it's a really good month, you can double up on your payment. But if it's a little bit not so good on the next month, you don't have a huge house payment you have to sweat about how you're going to make that payment and potentially ruin your credit. That's one good thing about this product. It's an interest-only option also because your mortgage payment would be significantly less than having the principal. Also, another nice thing is, like I said, if you have your month, you're not going to make as much as you normally do on a really good month or your average month. You don't have to sweat that big payment, and you'll avoid like a late payment because hopefully that payment is so small for you, it is always able to be made because you definitely don't want to have a 30-day late or a 60-day late on your personal credit. As being self-employed, a lot of times when you're getting your business loans, you're guaranteeing it for your business as a person. So when they pull your score, you don't want them to see a 30-day late or 60-day late on your mortgage. So you would definitely want to look at the different options there. Those things are really good for any self-employed client. That's just some options just to think about, on your personal situation. We'll do the same thing. Of course, we'll pull your credit. We'll do an appraisal. We'll do title work, and then we'll get you to the closing table. All of those things are really great. The best thing about it is it gives you multiple ways of getting financing into your home, and you'll just have to look at your different options. If you have any questions, feel free to give me a call. My office number is 817-887-8138. Again, it's 817-887-8138. Or you can message me. Or if you do like this, make sure you hit the like button, give me a comment, or DM me. I'll make sure I get back to you. I'll talk to you later.